Welcome to this week's live ASX strategy session. Great to have you with me as always. Lots of interesting things going on in the markets this week. I want to talk about the ASX 200, got copper, gold, oil, and uranium to have a look at. A couple of stocks, which I think you'll find interesting. And also make sure you have your stock codes ready that you'd like me to have a look at the charts for and go through some of those towards the end of the session. Now, as always, everything today, general commentary only, doesn't take your personal situation into account. Having gone through and said all that, let's jump into our first chart for the day. It's been a fairly quiet week for the ASX 200 at an index level. But like last week, there's been a few interesting developments going on when we look below the surface. I'll come back to these in a moment. But just starting with the ASX 200, the index has, look, this is where we were last Friday. So really it's barely changed in the last few days. And this is something we spoke about last week. We discussed the potential for some consolidation following this strong rally off the September low. Several weeks possibly of just chopping back and forth. It was one of the, it's often a likely scenario when you do get strong rallies, you do get those periods of consolidations that follow. The price action that we're seeing at the moment, it looks typically corrective. We're seeing that classic sort of sideways crawl back towards the 50-day moving average. So this is a 50-day moving average. Below that, we've got the 100-day moving average. So it's not dissimilar to the sort of price action we saw back in February. If we go back to February, so see we had this strong rally off a low point, and then we had this sideways crawl back towards the averages. Not dissimilar to what we're seeing at the moment. It's also this support here, this support that comes in at around 8,100. And this takes in some previous highs, a high from July, a high from September. We've also got this high in August, which slightly overshot, but generally holds around that point. And then we've got some lows just from more recent times. So that comes in around 8,100. This isn't, I wouldn't call this a major support zone, but I think it's a good near-term reference point for the for how the market is traveling. And with where this is now, if the market can consolidate and hold on to most of its recent gains, I think that would be a sign that there's strong buying interest on these dips when they occur, which is of course what we want to see in a rising trend. Now, one of the things a lot of people do when the market is rising is that they always worry. They worry that there's going to be a top. They always worry that the market is close to topping out. And I completely understand where that comes from, because we know that markets will peak at some point, and at some point there'll be a large correction. It's just how markets work. So the thinking goes, if we can identify that turning point, we can avoid the potential of having to sit through a large sell-off or be involved in a large sell-off at any point. The problem, though, I think, is that no one can pinpoint these tops, at least with any consistency. Someone might get lucky from time to time and call a top, but when you generally look at these things over time, no one can consistently call these key turning points. So I think the fact is that most of the forecasts for tops tend to be wrong, and a lot of people are wrong by years, and then they stay out of the market while the market keeps moving higher. So this is a risk with trying to call tops. I learned this lesson the hard way in the 1990s. So the 1990s, we had a big bull market, particularly in the US. This was the S&P 500 during the 1990s. Rather than ride this big trend, this was a great trend followers trend. And I was into riding trends, but I was also into picking tops. So I tried picking too many tops throughout that trend, and ultimately there was a bust, and I made some money being short in the bust. But I would have been much better off had I been investing with the trend throughout the market, throughout the bullish period, and using a trailing exit for when the market eventually peaked, rather than trying to pick tops all the way through the 1990s. So that experience taught me that if a market is trending, then let it trend. Don't interfere with the trend by trying to predict its end. So coming back to the ASX 200. So when I look at this chart of the ASX 200, I'm not looking for a top. When I look at this, I'm seeing an index that is rising. It's above its moving averages, which are also rising and making new highs. So by that definition, it's an upward trend. That's the way I want to play this. That doesn't mean we need to be blind to risk. We should never be blind to risk. I'm always talking about using wide trailing stops. What they do, they help me stay in trends. They give the trend room to move, and then they get me out and protect capital when the trend or the market ultimately turns lower. But at this stage, we have a bullish price structure. A couple of other points of interest this week. The equal weight index has been interesting this week. Just clicking over and having a look at that. And the ASX 200 equal weight, it's at its highest point, and it's making a new high today. It's at its highest point since way back in January 2022. And that's nearly 3 years. It's its highest point in nearly 3 years, and it's now within 2%. It's within 2% of its all-time high. So positive price action there. And again, this is bullish price action. It's not a sign of a top. Another thing I want to have a look at, which has been interesting through the week, has been the materials index. So materials is mostly made up of the miners. BHP is the largest component of the materials index. And this is interesting. We discussed this last week. There's been this strong reversal. We've gone from below the moving averages to above the moving averages. And now we're getting a pullback. We're getting a pullback towards the moving averages. So when you get a market pulling back towards the moving averages after a strong pull away from them, it's called a reversion to the mean, or like a pullback to the average. That's what we're currently seeing. So we can also see these moving averages are starting to turn higher, the 50 and 100-day moving averages. So I think this is a segment of the market where I'm actively looking for buying opportunities. I'm going to tell you about one a little bit later on when I talk about two stocks. There's a mining stock I want to talk about there. And you can also, of course, ask me about the chart structure of any stocks you're looking at, any mining stocks that you like the look of, because this is really looking interesting, this materials index, how we've got this strong potential trend reversion, pull back to the averages. It's going to be interesting to see how this price action develops from here. So just coming back to the ASX 200 for a moment, as we were discussing, bullish price structure, price above the rising moving averages. I believe the play here, it continues to be approaching this from the long side. And as always, I'm using those wide trailing stops to try and see off the inevitable pullbacks when they occur, and then of course get me out when conditions do change at some point. Now, if you're getting value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It just tells YouTube you're watching and you're getting some value, and YouTube shows other people, which helps me a lot. And now we're going to move on to the small ords in a sec. I've got the emerging companies in there. Gold, copper, oil, uranium, couple of stocks, your stocks we're going to look at. But of course, that wraps up the free section. So if you're not a strategy session member, there's a link below. Click the link, come on in, costs you not very much, and hopefully you get a whole lot of interesting information which you otherwise may not have been across. And okay, having said that, let's go over and go to the small ordinaries.